Well, coming back after the long weekend, it has been interesting to see what international markets have been doing. And overnight, on the first day of trade, US, European and Asian share markets have all declined. In fact, last week, US markets declined for the fifth straight weekly decline. And looking back over history, this is the first time that this has happened since 2004. So all things being equal, over the past month, equity markets around the world have been relatively underwhelming. And if we do look across last week, most US markets were really focusing on Friday's employment data out of the US market, and this was looking pretty average in fact. Employment growth was down on the previous month, and the unemployment rate has actually increased to 9.1%. This really does indicate that the US economy continues to struggle, and this will continue to play havoc on markets over the next couple of months. The fact that we've seen some fairly mediocre results for equities and commodities around the world over the past month has meant that the US dollar has been relatively weak. Of course, this has meant the New Zealand dollar has lifted, and of course last week we did see the New Zealand dollar lift to post-float highs of around 82.5 cents against the US dollar. We have buttoned off slightly since that period of time, but we start the week trading around 81.30 against the US. We could see a little bit of movement for currencies today, particularly for the Australian and New Zealand dollars, because the Reserve Bank of Australia are making their cash rate announcement later on Tuesday. We aren't predicting that there will be any change to their overnight cash rate, but if they start to talk a little bit more about what is happening in the Australian economy and putting some feelers out for future increases, this could have an impact on the Australian dollar, but also in turn on the Kiwi dollar. The US beef futures have flattened off over the past 4 to 6 weeks. In fact, they've flattened off around 15 to 20% in some cases. And the reason for this is a decrease in demand, particularly out of the US domestic market, but also a decrease in export demand for those beef exports that have been heading to South Korea. They are now starting to re-emerge after the foot and mouth scare, and this has meant that they're looking back to their own domestic supply instead of US beef exports. So what am I picking for international beef prices? Well, I wouldn't be surprised to see some softening in prices over the short to medium term. However, we have to continue to realise that international prices are at extremely high levels and much higher than what we would usually see at this time of the year. What this will mean for New Zealand farmers is a good question, but there's no question that we will see the New Zealand dollar likely lift from the current levels, and it could even lift to 85 cents. So if this happens at a time when international prices may flatten off just slightly, this will no doubt have an impact on New Zealand beef schedule prices and could take the shine off what we were expecting to be a very strong start to next season.